What is up, everyone, and welcome to another episode of Personal Finance Boss. But today we have a special announcement to make. We are actually filming this podcast, which will be our first video podcast, I guess.
Uh-huh.
So if you want to really know what we look like and you haven't checked us out on Facebook, you can actually go to YouTube and watch the video. And yeah, it's
We're
way through the
two
camera.
handsome guys.
Yeah, try to make it in the world. Who knows? But so yeah, check us out on YouTube, see our faces, and look at us laugh. I guess I'm not sure why you'd want to see us, but I
Watch
guess
Julian struggle with mental math.
yeah, start breaking out in sweats. 10% of 100 is Anyway, so our topic for today is stock splits and reverse splits or reverse stock splits. So why don't we go over stock splits?
So stock splits, kind of like how it sounds. It's when a stock splits. So what that means is it's gonna divide. The company's gonna elect. So the chairman, the board of directors, the voters. Do they have to get shareholder vote for that for stock splits?
Oof, that's a good question. Let me check.
But yes, the management's going to decide, usually because they want to dilute the shares. And the reason why a company would like to dilute the shares is because they want to, many times, for example, Google, they were trading, I think, at around, they were trading at a high price when they last split. I think 1,200, or they were over 1,000, right? Google, when they last split? Because it went down to 600. Google was trading at 1,200. And then they split. They did a 2-for-1 split, so they broke that $1,200 into two parts of $600, and they even created another share class, which is something we'll touch on later. But what this does is it breaks that $1,200 share price into $600 and makes it more appealing for some investors that looked at Google that may have wanted to buy it, but said, "Hey, we don't have the $1,200 to buy into Google, so now we can buy into Google. We can still get one share for $600. So Google did a 2-for-1 stock split. Companies can do a stock split at whatever ratio they want. I know Apple, their last stock split, they did a 7-to-1 stock split, but usually you're going to see a 2 or a 3-to-1 stock split, but higher ones are common. So why do companies do a stock split, Julian?
Well, many reasons, but the first thing, and I think it's mostly about investor perception of the price, right? So if you have Apple that's worth $700 and you have a young investor starting out and he's like, I have $1,000 to invest. I don't just want to buy one Apple share because it's not cool, right? Buying one share. I want to buy more shares, so they're going to buy a cheaper stock, say 100 shares of a $10 stock, because in their minds they're going to be making more money if that stock goes up just because they have more shares. But in reality, what you need to look at when you buy a stock is you don't look at the number of shares that you have. You look at the value that you buy. So if you have one $700 share or 70 $10 shares, you have $700, right? In both cases. And if you see a 10% price increase, you're going to make $7. $70 in both cases. So it doesn't really matter if you buy one $700 stock or 10 $70 stocks. But for the investor, the way they perceive the quantity of shares, they think more is better. So in that sense, when a company does a stock split, the stock price usually tends to go up because of this shared investor sentiment that, oh, the stock's cheaper now, so let me buy in and I can buy more, so it makes it more interesting. So that's one of the reasons why when a company announces a stock split and then they split, the stock price goes up. And usually companies that do well, because the prices went up a lot, they announce a stock split, so it means that the company is doing well, usually, right? And something else,
in many cases,
yeah,
except if it's a reverse split.
Yeah, but we're just talking about stock split. Yeah,
in most cases.
So now also what makes a stock split interesting for investors is that let's say you set up a DRIP plan, so a dividend reinvestment plan, right?
Mm-hmm.
You can repurchase more stock since it's cheaper. So another example, simple example, let's say you have one $1,000 stock and then you have $100 stocks and the dividend is 10%, right? So in both cases, you get $100 as your dividend at the end of the year. But if the stock is worth $1,000, your $100 dividend cannot buy an additional share, right? So if you could hypothetically keep $100 in a reserve account and then after 10 years, you'd buy a share, it would take you 10 years to repurchase a share using a drip.
Mm-hmm.
But if the stock price is only $100, but you have 10 of those, so you still have $1,000 in your portfolio, but then you get the $100 dividend, you can repurchase an additional share every year using your dividend payment. So it makes it more interesting for people that don't, have hundreds of thousands of dollars to buy expensive stocks and that want to set up a drip. So by doing a split,
mm-hmm.
it allows you to,
mm-hmm.
feel the effect of the drip much quicker.
Which is pretty good.
Yeah. Anything else you want to add on stock splits?
$1 million question about stock splits. Does a stock split actually make more money for the company? Like, does the value of shares increase when stock splits? Because a lot of people, they hear about stock splits and they're like, oh my god, the company's going up and we're gonna make millions of dollars off of it.
Yeah.
So does the company actually make money from the stock split? Does the core values
does the price of the
company,
stock?
Yeah. Does the core values of the stock change when they split?
Well, like I mentioned before, arguably yes,
mm-hmm.
because of investor perception of the
mm-hmm.
stock. It's cheaper now, so I can afford more, so I'm going to buy more, and it kind of attracts more people. And back in the day, like 20, 30 years ago, when stocks would split, you'd get crazy gains on that. You'd get like 12% gains on the, maybe.
No, you used to get high gains.
I'm kind of pulling out my ass, but I know you would get much higher gains back in the day than you do today, because I guess it wasn't as common knowledge that stock splits don't create value. They just
actually,
it's kind of like repackaging.
It was harder to get capital back in the day, also.
I mean, if you have capital, you have capital, right?
But like you wouldn't like right now. $100 is not really as big as it used to be.
Yeah, but you got to think of a stock split. I think as like a polishing job on your car. It's the same car, it drives the same, but it looks kind of different.
Mm-hmm.
And that's what makes it, that's what makes your car so much more attractive. Wow, it looks so shiny, it looks brand new, so let me buy it. But when a stock splits, it's the same thing. It looks shiny, it looks accessible, it looks new, so let me buy it because it's cheaper.
Mm-hmm.
So I think that's why stock prices go up.
So would you recommend, if a company announces a split, would you recommend buying that stock to get the split? Like, to benefit from the split?
I haven't been around that long, but I haven't witnessed that many stock splits. But in Apple's case, when they split 7-1, I remember buying in at $91 after the split. Well, not before the split, after the split. And it did pretty well. But you could argue that Apple would have done well anyway, or, maybe you get an extra 5% because they split or something. But yeah, normally if a company splits, it's because they expect their stock price to go up in the future or because they think it's worth too much money. So usually it's a good sign.
Mm-hmm.
But then again, if you really you dig deep and you look at what is really happening, nothing should be happening. It shouldn't influence the price at all. But it just does because, we all have our investor biases and stuff that make us think that this is worth more money.
Mm-hmm.
So, yeah. Now for reverse stock splits. You want to take that away?
Yeah, sure will. So reverse.
But actually, wait. Before we get to this, shareholders can vote on stock splits. Usually, management proposes it, and then if the shareholders have a bone to pick with it, then they can vote against it, and then they would cancel it. So they do have a call, but usually, it's very rare that people would be against a stock split.
So reverse splits, very interesting. Reverse splits are usually a tool used by companies that are not listed on big exchanges. And the reason why is because big exchanges usually have rules regarding listing. You have to have a certain market cap, you have to have a certain stock price, and usually that's because the lower-ended companies like penny stocks don't really have as much trading regulations. I know there's a rule in the States where penny stocks, in terms of their financial statements, they don't have to disclose a lot of things. They can choose to disclose some things and forego other things. So usually the SEC has done this in a way that what companies are listed on big exchanges, they have strict regulations so that when investors buy the shares, they're getting access to the most accurate information as possible, which can allow them to make the most informed decision. And we all know that penny stocks, although they can be profitable, they're very volatile. They trade
and
frequently.
They normally trade based on speculation.
Yes.
So there's a lot of pump and dump. So buy, make 100%, sell the stock, dump all the way back to where it started off, and then you'd see that pattern over a set of weeks or months. So you don't really create value. It's just speculation to kind of get rich quick.
Yeah.
So yeah.
And that's why you'll also see some advisors that say, I don't buy stocks under a market cap of say 250 million, because sometimes the volume also is so low that if they put an order in of $10,000, that's enough to shift the price up.
Yeah, and then if there's no liquidity, meaning there's not enough volume being traded, then when they come to sell the large position, they won't be able to. Or selling the position, like Ali said, is going to move the price down 20%. So it's not very interesting for them.
But anyway, reverse splits are a tool used by companies like the ones we mentioned to be listed on big exchanges like the NASDAQ, like the Dow Jones, or in the case of Canada,
Dow Jones isn't an index.
The New York Stock Exchange. I always make that mistake. The New York Stock Exchange or the Toronto Stock Exchange. So what they'll do is they will take, for example, a 50-cent share price. If they do a 1 to 5 reverse split, that share will now be worth $2.50.
Yeah.
So it's just the opposite. In the case of a stock split, we divide the stock price by the ratio. In the case of a reverse split, just multiply it.
Yeah.
So what this does is it's going to take, for example, if the company had 1 million shares outstanding, now we're going to have 500,000 shares.
Yeah,
but
for a 2 to 1 or 1
for a 2 to 1 reverse, for a 1 to 2 reverse split, and each share price would be worth double.
Isn't it 2 to 1?
It's 1 to 2.
1 to 2.
It's 1 to 2.
And another reason why companies would do it.
1 to 2.
Yeah. Okay. Why they would do it is to remain listed on one of the big exchanges, because if you're a small company, you want to be listed, fine, you do a reverse split and you get listed. But what if you're a big company, but over the past many years or many months, your stock price has been taking a hit. So if you look at a lot of gold ETFs, like NUGT, for example, which is a 3 times levered gold mining ETF, they do reverse splits all the time because the stock price, their ETF price has been going down consistently over the past trillion years or something. It's been bad for them. So they would do a reverse split to not seem like a cheap stock. Like, what is this, $2.22? So they do a reverse split. It's now worth $20. So it makes it more interesting, and then that allows them to remain listed.
And being listed on the big exchanges, you may not think it has a big tool, but being listed on the big exchanges is a really good tool for promotion also.
It's a good marketing tool.
Exactly. People look, they see you're listed on the New York Stock Exchange or the Toronto Stock Exchange. They're like, wow, this person's listed on one of the big exchanges, rather than the same stock being listed for cheaper and maybe an attractive price, but on a lesser worthy exchange.
And another reason why companies can choose to do a reverse stock split, 2 reasons. One is if you decrease the liquidity, meaning you decrease the outstanding amount of shares, so from, like Alex said, 1 million shares to 500,000 shares, you reduce the liquidity, so trading the stock will be slightly more difficult. Now, depending on how much you reduce, if it's a 10 to 1 to 10, 10 to 1 or 1 to 10?
I think it's 1 to 10. let me. I think it's 1 to 10, but
check
I'll check that up while you talk.
So yeah, if you do a 10 to 1 or 1 to 10 split, meaning you have 10 times less shares outstanding, it's going to be more difficult to execute trades. So it'll kind of deter the day traders and the speculators from trading that stock. And another reason why is if you decrease the liquidity, it's also harder to short sell the stock or to short the stock, which helps reduce the float, which is I think the percentage of how much of the volume is short.
Isn't the float the difference between the bid and the ask price?
No, that's a spread.
That's a spread.
I'll Google the definition, the exact definition of float, but float has to do with the proportion of people that are shorting the stock. So if a stock has a lot of float, if the float's large, it means that a lot of people have a negative sentiment towards the stock and they think that it's going to go down. I hope
it's the number of shares available for trading of a particular stock.
So. Oh yeah, okay. Well, really?
Yeah.
Okay, well, I'm completely wrong. But it reduces that amount, so it's harder to short sell the stock, right? And then thirdly, like you said, the bid-ask spread, meaning if you sell the stock, you sell it at $9.95, and then when someone buys the stock, they buy it at $10, which means it's a 5-cent spread. So the larger the spread, the more people don't want to trade the stock, because every time you trade a stock, you lose 5 cents instead of losing 1 cent, right? And that profit is what the dealer makes. So the person that's facilitating the transaction, or the middleman, they take that commission or the spread.
Mm-hmm.
So if you decrease the amount of shares outstanding, usually that increases the spread.
Mm-hmm.
So it kind of makes it helps reduce the speculative trading on the stock, which some companies may want.
That's also why you'll see, for example, Berkshire Hathaway, whose stock is about 250,000 US. The reason why they've actually priced this stock so high, and they only have 769,000 shares, is because they want to reduce the speculation on the stock, and they only want loyal investors who are committed to long-term capital appreciation to be in the stock. They don't want this, buy here, it went up 12 points, let me sell, and so on and so forth.
You can still do it.
But it's not where you're going to find 250K.
A quarter of a million. No,
yeah.
It's more like if you're a day trader with a lot of money, go for it. But for the average investor like Ali and I, there's no way we can afford a Berkshire Hathaway stock.
And look, usually on a daily basis, they trade from 9:30 to 4. Only 369 units are bought and sold of Berkshire Hathaway Class A stock.
That's crazy.
Only 360. You could count it throughout the day. Only 369 times. And you look at like Bank of America that trades over sometimes 100 million times in a day. This only trades 369 times. So when they reverse split, they really want to reduce that speculative aspect on the stock, which is what you'll see.
Cool. Anything else that we want to add to stock split?
I don't think so.
Do you think a reverse stock split has the opposite effect, meaning, stock's more expensive, people buy less? I don't think so, because usually companies don't do a reverse split from 100 to 1,000. It's usually from under $10 to something north of... It's
usually like dollar stocks or cheap dollar stocks going towards 10 or 15, but usually shareholders love it, because that means they're able to list on a big exchange. I know a lot of the biotech research companies, if you go on like their forum boards, they're like, oh my god, reverse stock split's coming up. And it's the same thing. Now that people may have been looking at it, they're like, I don't want to buy a penny stock. Now the same thing's on the NASDAQ. They're like, yeah, you know what? Maybe we can buy it now.
And also...
that should take the price up also.
And institutional investors, like, big funds, they can't buy penny stocks. Yeah. So by listing on the NYSE or the Dow...
the New York Stock Exchange, man, okay?
Then the stock then becomes accessible. I'm not saying that they're going to buy it because, they have a prospectus that they need to follow. But if it falls within the guidelines that they're allowed to trade, then now they can, hypothetically buy that previously cheap or penny stock, or depending on what the stock is, and buy that in the portfolio. So it could be interesting to investors to go into a small cap stock and buy it there. Look for additional gains.
All right, guys, thanks for tuning in. As usual, you can contact us at personalfinanceboss@gmail.com. Or reach out to us on our Facebook page, which you'll find on the SoundCloud feed there. Other than that, thanks a lot for tuning in.
But now they can add YouTube comments. So if you guys want to troll us on YouTube, feel free. Feel free,
Julian will check those out. He has a lot of fun on YouTube.
Oh, really?
I don't know. You have your channel with.
Yeah, but this is separate. Anyway, welcome to my 1950s basement. This is great. Can't wait to get out of here.
Fashionable wood paneling. Julian did this on his own time, by the way.
No.
He's a good contractor. He's a good contractor.
I did this in the house that I'm renting. Yeah, I invested money in this unfinished. Yeah, great. Maybe one day I'll show you around my wonderful basement.
One day.
Yeah, anyway, guys, we will see you in the next one, and hopefully this YouTube stuff will add another dynamic to the whole relationship that we have with our viewers. Because now you can see our faces and see how...
Julian's single, by the way.
I don't want to say... Thanks, Sally. I don't want to say full of shit, but I don't know. See how much we struggle during the podcast.
Let them come up with the comments, okay?
Yeah, see how much we struggle when we need to fact check ourselves, because we don't really know what we're going to be talking about exactly in the podcast. So things come up like, can shareholders vote on a? Probably, but yeah. Anyway, thanks for tuning in, guys. See you in the next one.